If your employer provides a medical flexible spending account, often referred to as an FSA, you have the opportunity to save money on your out-of-pocket medical expenses. An FSA through a cafeteria plan is a governmentally allowed plan where you do not pay federal, FICA, also known as Social Security and Medicare, and in some states, state income taxes on qualified out-of-pocket medical expenses. Therefore, a person can generally save around 20 to 40% of their medical expenses, up to certain limits, because you are allowed to exclude these amounts from your income when reporting your taxes. In addition to not paying taxes on qualified expenses, another benefit of the FSA is that the money is pre-funded into your account. This means that your annual election will show up in your account on day one, and you slowly pay back the annual election amount through payroll deductions. For example, if you elect to fund your FSA account with $1,000, you will have all $1,000 available to you on the first day of the plan year. If you get paid weekly, for example, you will then see a payroll deduction of $19.23 out of your paycheck. To understand the FSA a little better, allow us to walk through two examples. Let's say you go to your family doctor for an appointment. You will most likely pay a copay or some other amount for the visit. For this example, let's pretend that you have a $40 copay. You write a check to the receptionist and you get a receipt. Provide this receipt to us at Beneflex-Erie and we will review it to make sure it is a qualified expense. If we agree that it is reimbursable, we will send you a check for $40 or deposit the funds directly into your bank account. Now let's say your plan offers a debit card. At the doctor's office, you can pay for the $40 copay by simply swiping your Beneflex-Erie FSA debit card. Depending on the information we get from the debit card swipe, the funds will automatically come out of your FSA and there will not be a need to send us any receipts. It's that simple. In both examples, you paid for your doctor visit using pre-tax money.
If you are in the 22% tax bracket living in Pennsylvania, that means you saved $13.08 just by participating in the FSA.
To participate in an FSA, you simply have to do the following. Familiarize yourself with the specific details of your employer's plan by reading through the plan documents and information packet provided to you by us here at Beneflex-Erie. Decide how much to contribute to the FSA, enroll into the FSA, and then start spending the money on qualified medical expenses. It's important to remember that the medical FSA has a use it or lose it rule, which means that any funds you do not use at the end of the plan year are returned to the employer. However, employers have two options to help combat this use it or lose it rule. Option 1 is to implement a grace period, which gives you an extra 75 days to spend the money in your account. Option 2 is to implement a rollover, which allows you to roll over up to $500 unused funds into the next plan year. As always, visit us at Beneflex-Erie.com or call us at 1-800-454-3107 if you have any questions.